Several buildings right now. Kind of a cool shot from Skycam 9 we wanted to show you.
Federal Reserve expected to keep raising interest rates this year as they try to stem record inflation.
But last week's rate hike of 75 basis points does not appear to be having a big impact on mortgage rates right now. David Hochberg is the vice president of mortgage lending at Team Hochberg Homeside Financial and the host of Home Sweet Home Chicago on WGN Radio. Did I miss any other title?
No, that's pretty good. That's
okay,
a mouthful.
Good.
Well done.
All right, so what in the world is happening? I mean, usually these two things are kind of tethered together, and now they're not?
Yeah, well, the mortgage markets follow the 10-year note. And basically what's been happening with the 10-year note since January 1st, it's been on a rocket ship up. So it started, the lowest I've seen, I've been doing this 21 years now, and the lowest I saw it was in August of 2020. We hit 0.4 and the interest rates were at 2.5%. Then they jacked up to 3.4 and the rate shot up to 6.5%. Now they've come back down. I think it closed today at 2.7 and the 30-year fixed is still in the mid fives. You know, let's just say that. So the prime interest rate, which is what the Fed plays around with, has been jacked up 2.25% since March. So that's had a major impact on our viewers' home equity line of credits, car loans, credit cards, if you have variable rate, adjustable rate mortgages, or if your student loans are tied to the Fed rate, it's costing our listeners and my listeners, your viewers, a lot more money. And that's where we're at. So the mortgage rates follow the 10-year note is what you have to look at.
So what is that doing to the housing market? Because just a few months ago, we saw houses go up and within a day they were going down. Now I'm seeing these sales signs sit for a bit.
Sit for a little longer than you've experienced in the past 2 years. My wife and I take our dogs on a 2-mile walk every night. And basically the houses that were on sale now that would have been off the market in 3 or 4 days have been on the market for 60 days. And now we're starting to see price reductions. And when you talk to realtors out there, they're telling you it's softened a little. It's still a fluid market.
But buyer or seller, you know, it was such a seller's market.
The pendulum is swinging now.
Okay.
As the rates have gone up, the affordability has gone down. Our viewers qualify for less money. So now that the interest rates have ticked down just a little bit, it makes it a little more affordable, but you're not affording the same amount of home as you did when the rates were in the 2s and the 3s as they are now in the 5s and the 6s. It's simple math. It's costing you twice as much money in a mortgage payment than it did at the beginning of the year.
Right.
So, you know,
people
prices
are kicking
will start
themselves now,
coming
I'm
down.
sure.
All right, well, through your work on the radio and your appearances here, you get questions from viewers. You've got one?
We got one from one of your viewers, wanted to know if you could if his family could refinance out of a Chapter 13. Chapter 13 is a bankruptcy where they went to a bankruptcy attorney and the bankruptcy attorney filed the papers and they got a reduction on the amount that they owed and they're going to pay it out over the next 3 to 5 years. The answer to the viewer's question is yes, you can refinance out of an FHA loan, out of a bankruptcy, a Chapter 13 with an FHA loan.
Okay.
You have to get the trustee's permission. You have to show typically 12 months of on-time payments with the bankruptcy, and your loan to value with your current mortgage plus what you owe the bankruptcy has to be 80% of the value of your home. So you have a lot of moving pieces there. This viewer had a lot of moving pieces, and we're working with the viewer, but it's tough right now. Times are tough. I mean, it's great that the governor is throwing in the tax credit, but let me tell you, our viewers right now have jacked up credit card debt, and they've opened up more credit cards, according to a recent CNBC report. 233 million credit cards were opened second quarter of this year. So a lot of our viewers are struggling with debt. So be careful out there because that'll come back and bite you.
And that's going to impact the ability to pay off a mortgage or to get a mortgage as well.
It typically reduces the credit scores, which then puts our viewers in a lower category to qualify for a low rate. So it's a double-edged sword, very tricky.
For people who are trying to increase their credit score, I know you've got some good tips.
Yes, the easiest way, and again, I know this is simple, but make your credit card payment every single Friday. Don't wait for the credit card bills to come. Why Friday? Because it's Friday. I mean, who forgets Friday, right? So if you get paid every Friday, Go online, knock it down, whatever you can, right? Start chipping away at that iceberg. And look at your 401k. See if you could borrow from your 401k. It's all hands on deck. Pay yourself back instead of paying the credit card back, okay? So it's these little tricks. And if your viewers have, I know we're getting waved, shut up, Dave, we got to go to break. But if your viewers have any questions, please give me a call. The consultation's free. If we could help you, we will. And if we can't, we'll put you on a path to get you into a better position down the road.
There's the website. You see it right there, 56david.com. We would never tell you to shut up.
No, I know. I apologize. Thanks for having me.
Thanks, David.